Good morning. Okay. So I'm really hoping this market will drop into this support here. And the faster this thing goes down, ideally, I think the bigger, the better the bounce. Thinking is getting further away from any price resistance. And so far, you can see in the ES here, and I've kind of expanded this and may go to, I think I'll go to a 180-minute chart just to look a little further to the left because it's into this void. And yesterday's drop, the continuation of the drop, has created a void above here. So this little trading range that's going on here, while this price action is suggesting it needs to come down here where buyers would be more aggressive to buy down at these levels where they bought before. If they could get prices above this area, well, then, we probably get a bounce, and that's tradable intraday. But the bigger trade would be if this starts to drop, it's got decent room to get down here. And, once it's down here, I kind of, there was a post on one of the social media sites this morning. Once it's down into this area, whether it's this swing low or this swing low, I mean, we just track it on the way down. And then, we go to our 5-minute chart and look for breakdown failures, higher lows, W bottoms, head and shoulders bottom, whatever, So sometimes they happen fast, climactic reversal. Sometimes it takes a little longer, W bottom. Sometimes take a little longer than that. Head and shoulders bottom, downside shakeout, whatever it is. We just look at it as it develops bar by bar. And, the location of that bottoming pattern, right, what Dan and I spoke about yesterday in the MT Live about bottoms in multiple time frames, is essentially what I'm talking about here. Is that price is moving down, daily chart saying, here's our big support. We can see it on a higher intraday time frame, in this case, a 180. And then once it got into that area, we can start to drill down to a smaller time frame to look for some type of a pattern that's signaling a reversal in the same area. So we'll see how that develops. So, right now we've got this little consolidation going on, and if it clears here, that will get some shorts to cover. And then, maybe if it bounces up into that area there, it'll look to reshort. So we'll see. That's what we do. Look at where prices are, multiple time frames, drill down, get our reference points, and then see where they go from there. And Qs, looks like it, like today could be an inside day, wide range bar breaking down here. You can see the same pattern, just chopping back and forth for now. So it would not be unusual to get an inside day after a wide range bar like that, and then we'd see what tomorrow brings. Someone helped me in the room. ISM number coming out about non-manufacturing. Is that at 10 o'clock today? Or is that already out? 10 a.m. So be aware. The other day, the ISM manufacturing came out. The markets were going up and they cratered. That's what got things down. And then we got the jobs report. I think it's tomorrow. So we've got this news-driven market very focused on these news events, which are implicating recession or maybe not, and the Fed easing or not, and all of that. Whereas, different market environments, news can kind of like come and go without much fanfare, and that isn't the case right now. So you should always be checking when these news reports are coming out, not to be blindsided by them. But the market is in a phase where, it's like a day trader where every tick makes a difference. And that's what makes things pretty crazy as they are right now. The Dow same thing. We got 2 days down so far, inside day. It's waiting here, and probably after the shellacking that happened over here on that ISM number where it was going up and then slammed back down, probably many are just waiting to see, standing on the sidelines or hedging, waiting to see that number when it hits there at 10 o'clock, what's going to happen there. Mid-size versus multinationals. You can just go to econoday.com and it explains the different things, Paul. But the one was manufacturing, and this is supposed to be non-manufacturing. So I guess it could be non-multinationals, but I really don't know. But I guess the event where it turned on this day here, the Fed chair has been saying all along while he's been giving his speeches after even before or after announcements was, we'll be watching manufacturing slowing down in Europe. We're concerned about it here. And then we get a number that confirms what he's been saying he's looking for, which says, okay, he's going to lower interest rates, right? Odds are pretty good that he's going to do that, but the economy is slowing. So, is it going to be enough? And then I haven't heard any talk about it, but I guess at the next announcement time, when that comes, the talk will be whether it's a quarter point or 50 basis points. And, how long before they get to zero and all of that stuff that goes on. So we'll see how it all unfolds. And the Russell, same intraday pattern here. It's on a little bit of support, came all the way back down to the bottom of the range. Well, it's almost there. Looks like it'll get there. So same story, as far as the market goes and looking at these various markets. If you can get above here, rally, but we want to, well, you could be nimble, of course. You're not at 10 o'clock yet and it's rallying. 10 o'clock's coming. Probably if it's up here, take your money, stand aside and wait to see what happens. Many things about trading are choices, meaning you can have different strategies that you trade. Or there's lots of strategies that you could trade and you decide which ones that you want to. You don't have to do every strategy that's available. You have to find out what you're comfortable with. And oil heading back down. Looks like it's going to $50. It was holding here and now it's starting to break. It's cleared that and, just scrunching the data up here since it's so far away. Here was the one level and it tried to hold here. It failed. So you look to the next level. We'll see. So there's a vote for a slowing economy. And then bonds, they're perking back up here. Yesterday, they were a little slow, as far as like the market falling as it did. But now they're starting to push up, which means, interest rates are going to start pushing lower. And if they're coming down here, the whole yield curve inversion story starts up again. I don't know if it ever really went away. I guess it subsided for a little while. And, all of these things coming back and coming together and, China and it's not being resolved and the impeachment thing and all of these things, slowing economy and all the hopes of it'll be okay start to go out the window and it feeds on itself. And then we'll just have to see if, time frames start to break down when we start looking at weekly and monthly charts. So, here, we just have a trading range. And, that's been the case. This is just a big trading range this year overall from the initial rally, and it's a trading range. So, all of this, maybe we get the end of year rally. And that's one of the reasons I hope this just keeps falling you know, if it was to do that today, or even if it means tomorrow, falling all the way down here. And so even if it's going to get worse next year because of a recession, at least, you know, for an end of year rally, we've got a void above for prices to rally into. And then, you know, we go back and look at what has shown relative strength during this drop and held up. Those are the ones that'll probably lead. So, you know, that's all part of the work that we have to do. Gold, you know, kind of messy here, you know, rallying. The weekly is setting up. I think this daily needs a little bit more time. You know, as the market turned, this reversed, and we're monitoring this to see how it unfolds as to maybe a W bottom here. We'll see. You know, this week looks like, you know, depending on where we end up by the end of day tomorrow, maybe we got a bottoming tail bar and maybe a pullback into this week's range next week would be a viable setup. So something we'll be looking for there as well. Silver, just chopping around here. Right? So there's no, you know, the short side obviously was the place to be. And, you know, is where the market's also falling like that yesterday. So we'll see, you know, as things hold here, which way they can get through here or back down again. And as I always like to look at the transports to see if there's confirmation. And, oh, yeah, you know, all the way back down to the bottom of the range there. So when prices, you know, rally as these did so strongly from the bottom of the range to the top of the range, it is, you know, there is that potential that it can consolidate up there and absorb the supply. And so that was what we were looking for initially. Show me confirmation of this strength by going sideways at resistance. And it just didn't do that. You know, after getting up there, gap down, deterioration, failed at the next level where buyers tried to turn it around, and down it went, and now down to the bottom of the range. And we start all over again to see, can it hold the bottom of the range? Can it turn around? Does it go sideways down here with an inability to rally? Right? So what we were looking for here was sideways, inability to drop, demand continues. Well, if down here, because there was demand before, that starts again. And if that demand can't push it back up, some type of reversal like this, bottoming tail 180 or just a 180 over here, and it just chops around with small ranges down here, well, that opens up the door to a drop. And if we see the transports dropping below this support here, and we see interest rates dropping and oil continuing to dropping, I think you can, you know, bet the house, so to speak, not exactly, that a recession is coming next year. So we don't have to be an economist. We just have to know where to look, and the markets will tell us what the likelihood is of what's going to happen. So a lot easier than following all these economic reports. But like the one that came out earlier in the week and the one that's going to be coming out today, the market is very focused on them. So we should be aware and not get in the way of getting on the wrong side like the majorities did. And you know what, I can't blame them for what happened, because what I was looking at here with these bottoming tails on that day, and the markets were up going into the report at the top of this bar here, things were looking like they were going to pop back up. And then when that report came out, it was just, you know, tank to the downside. So, all righty, that's about it for me, Dan. All yours.
All right, good morning. Yeah, we got caught in that NVIDIA and shop on that morning breakout. Things were looking great. So we stopped out of those yesterday, and we took our profits in BLK, so we're flat in the weekly. And swing trader, let's go through these. ABMD, We're short stock. We covered a third. That looks great. DK is just a big mess here. Dollar Tree, we're long stock. FSS, long stock. Has a core trade. FTNT, we have a bear call credit spread and short stock. Hess, this is its oil stock. We got assigned on the stock when we shorted puts. HFC long stock, and that looks like that one's stopped out. IBM, we have a covered call. ITB, a put spread. Jable, covered call. I, gave it up yesterday. It's still holding much better than the broader markets. Kim, that was a breakout on all time frames. Oscar Charlie, put spread and covered call. SITC, long stock. SRE, long stock. TERP, long stock, holding well. TYL, covered call. And finally, Whirlpool, short put spread. So we had some nice shorts. We covered a bunch of them yesterday with nice gains, and some of these longs are coming in against us a little bit. Gappers here, booking, BKMG, deep retracement. Under yesterday's low, it looks like it can go to 1900. Knock got an upgrade, but there's no pattern there. Surprise, light volume. Yeah, I saw it up here, $2.50. That could be a day trade long over a 10, 15, 30-minute high. ANET got a downgrade, 222. Now here was a bottoming pattern, right? We had MT live yesterday. That was a perfect one. And right here, this engulfing, that was it didn't go very far, but our target wouldn't have been that big anyway. But that would have been a beautiful either day trade or 2-day run. Gapping down here, 290. Wow. Wow, that's stock's in pain. Would you enter Jable covered call now? No, heck no. RECN 1576, way down here. That's bearish. Jable. No, it looks like it's coming in. So, you know the rules. It has to stay the upper 50%. But no, yesterday was a bearish engulfing bar with a price void below. No, I wouldn't enter that. Our covered call is helping the blow of the pullback, but our stop is under this bar. Pepsi had earnings 130, over yesterday's high. Yesterday's high, that could get going. So I'll put him here. This crowd has a very nice gap. This is one of the better looking gaps I see today. We actually talked about this in MT Live. 2-bar reversal, possible bottoming pattern. We were wanting a beautiful W pattern, but now instead of a W pattern, we're getting a nice gap from this 1, 2, 3, 4-bar reversal. So that's a definite long watch today. ABMB, these are these. So now E-Trade joined the free. I don't know why they're giving free commissions on stocks and not options. They're saying, oh, it's still 65 cents a share contract. Ameritrade is still a dog. BMW is still I'm watching for a put spread. ARCB, I think at earnings. Go, 34 bucks. A nice gap, but no pattern. Yeah, so why is that? Why are options different? STZ had earnings. Oh, here's a bearish gap. That's going in my favorite gap list, STZ. Look, it's gapping under support and it has room to fall. Target, whatever, 195. Someone on YouTube's asking about CMG. It's a big, fat, sideways trading range. We have multiple levels of resistance. You got nice support here, some support right here. It's opening flat. I see no compelling pattern at all. Maybe a day trade short under yesterday's low. I wouldn't be looking to go long this because that's, remember yesterday we were talking about green bar ignored. That's the message. This was a maybe an Iron Condor would be possible, but you could do, it would have to be the 780s or lower, and just eyeballing this, the 850s. So yeah, it's an Iron Condor candidate, but I don't see anything to trade the stock. Let's continue. So I got 3 gappers here so far. I like Crowd, Pepsi, STZ. HIIQ for McGraw. It's a churner. Nice. It's a W retest pattern. That's a bottoming pattern. And it's just, you know, I wouldn't, if you're in it, sure, I'd hold it. It's relative, anything green like that. Look, it closed with an engulfing bar with yesterday's weakness. That's strong. BBBY, I liked this gap the other day, but, you know, I wasn't touching it into earnings. Now it's had an ugly gap this morning. And now there's nothing to do there. Romeo Hotel, bar by bar analysis, breakout failure, topping tail, gap, close, price void. This is a great call spread candidate and short. That looks good. Putting that in my list, my window. And you know, we don't do anything at the open here. Let's just, you know, get a bias. SDC, I was watching for a double bottom. It's not ready. Roku, I still like. Oh, look at Pepsi popping here. So Roku, we have posted as a put spread. And, you know, if we get a good trigger and a good close, we're selling a put spread that expires tomorrow, but we'll do one for next week also. This is, again, our MT live. It's a bottoming action, but we need the event that we talk about, the event to give us confidence that there's a turn. Yeah, see, this shop looks so good. And we did a put spread and then yesterday's weakness. And I am done. Oh, Tilray, not Tilray. PayPal still looks lower. Tesla had news. It actually was holding well, kind of building a reverse head and shoulders. Now it's a bearish gap here to 232. This is, you know, you mentioned a condor on on CMG. Now this is a condor candidate. Depending on what it does here in the first 30 minutes, you sell, you know, the 250, 260, and whatever, 212.50 and below. Or 220 would be tighter. Depends on days to expiration. Oh yeah, also 10 o'clock news. So we gotta be careful on any new plays ahead of 10. So right now with this gap, I would favor under a 5 or 10 minute low, I would favor just the call side. You know, so when we put on condors out of the gate, they're harder, you know, they're harder. I prefer legging into them. Yeah, market still looks heavy here.